Ladies and gentlemen, we're live. Thank you all so much for being here. Today, we have Jonah from Lupton Capital. You can find him on Substack, StockTwits, Seeking Alpha, YouTube, wherever you want to find him. But that being said, he's here to pitch us, if I'm not incorrect, his largest position in his portfolio, CELCIUS Holdings. Jonah, how are you doing today?
I'm good. How are you guys?
Doing fantastic. Well. Yeah.
And yes, you are correct. CELCIUS is my largest holding. It has been for the better part of the last 3 years. It's at least been in like the top three for the past 3 years. But right now, it's by far and away my largest position.
Got you. And what percentage of your portfolio, if you are open about that, would you say it's around?
Between 15 and 20%.
Gotcha. Okay. Yeah. And I'm sure a large part of that is also because of the stock appreciation. The stock has been exploding. Why is that? What's going on with this drink beverage company that's got everyone so excited?
Maybe before we go into that, I can just ask, Jonah, when did you first start accumulating? Like, when did you first start buying this? Just so we can get a timeline.
Yeah. So back in, it was either April or May of 2020. Okay. So right after the pandemic started, a friend of mine mentioned CELCIUS to me, and I had seen their cans in a couple gyms before because I was traveling a lot at the time, so I was using different gyms all over the country, and I think it was I forget which one of the big chains it was, but I remember seeing a CELCIUS in there. You know, they have like a little restaurant inside of the gym.
April or May would be.
But I didn't try it. Like at that time, I mean, I had tried Red Bull, Monster, Bang. I was drinking probably one Bang a day before my workouts. You know, it has 300 milligrams of caffeine, so that's a pretty good bolt of energy. But when my friend mentioned it to me, he said that he had started building a position. I'm like, okay, I'll order some on Amazon. I got the orange. I tried it. I liked it. I thought it tasted better than Monster and Bang and Red Bull. And then you look at the ingredients, and it's way healthier. Like it actually has some vitamins and minerals in there, but it also had, besides the caffeine, it has ginseng, it has guarana, and it has green tea, versus Bang, Monster, and Red Bull are basically just caffeine and chemicals. So I definitely understood the healthier alternative, right. But no one knew about CELCIUS. You look at the stock back in 2020 when I first invested. So I finally got into the stock around $10 or $11. I think it bottomed out at $3 in March of 2020. So I didn't catch the bottom, got in at 10 or 11 bucks, and then started building my position through the summer of 2020. Back then, they were expected to do, I think, 300 million of revenue in 2023. And this year they'll end up doing 1.3 billion.
Yeah.
So 3 years ago, analysts were expecting 300 million. This year, they'll do 1.3 billion. Back when I invested in 2024, I mean, 2020 was a $10 stock. For the 2024 estimates, I think were 400 million. And next year they should do somewhere between 1.9 and 2 billion. So you ask why is the stock done so well? I mean, that's why. I mean, they've absolutely obliterated the estimates going back over the past few years. Now the stock's around $150, $155. About a month ago, it did get up to 205 or 206. So, and I've added a lot over the past few years. So I put up a chart on Twitter a couple of days ago. Since I invested in the stock a little over 3 years ago, there's been 10 pullbacks of 25% or more. There's been 3 pullbacks of 40% or more, and there's been 1 pullback of 60% or more.
Is this one?
Yeah, that one.
Okay.
So, I mean, obviously 15x, almost, well, I mean, it was 20x, I guess, from my original purchase price a month ago before the pullback. But even now, 15x for my first purchase price is great. But I mean, that's a lot of pullbacks. I mean, that's a lot of like fear and doubt and uncertainty, and the stories change a lot over the past few years. So when I first got into the stock in 2020, they were doing DTR, which stands for direct to retailer, which means they were signing up retail stores and they were shipping cases of CELCIUS to the retail stores or the retail stores' distribution centers. But at the end of the day, it was an employee of the store that was stocking the shelves. And because Celsius was a no-name company with no market share, they were on shelves.
Right.
So they were warm cans sitting on shelves. That's not how most people consume energy drinks. The majority of people that aren't buying it online or aren't going to Costco and buying cases are walking into a convenience store, a gas station, a CVS, a grocery store, and taking it out of the cooler because they want to drink it right there and then. Or, they're buying it at the gym because they're going to drink it, before their workout. So, employees stocking shelves with warm product was not exactly the best way to grow this company. What started to change was in 2020, Pepsi and Bang formed a partnership. So a few years ago, maybe like 6 or 7 years ago, Pepsi bought Rockstar for $4 billion. Or no, Pepsi did a distribution deal with Rockstar, exclusive. So that's who Pepsi was distributing. Anyone that's tried Rockstar knows it's garbage. Like, it's by hands down the worst energy drink out there. But that's who Pepsi was distributing. And like, you go into these convenience stores and in these Pepsi coolers, it's Rockstar. Finally, Pepsi said, "Screw this! Like, we're pumping the crap of the sector out there." So they decided they wanted to distribute for Bang. Bang had been growing very rapidly with Anheuser-Busch. In order for them to distribute for Bang, they had to buy out Rockstar. So that's when they paid $4 billion for Rockstar, just to basically put it to say thanks but no thanks, just so they could distribute Bang. So 2020 is when they started distributing for Bang. That opened up all the Anheuser-Busch distributors for Celsius. So that's when the story started to really change for Celsius, and that started to pivot them from the DTR model into the DSD model. So DSD stands for direct store delivery. That's where these Anheuser-Busch distributors are putting Celsius on their trucks, bringing it to stores along with many other products, and then stocking the coolers and the shelves themselves. And that was kind of the beginning of this exponential growth. That's when they went from 20,000 stores to 100,000 stores at the end of last summer. And then what was kind of happening behind the scenes in 2022 was Bang was getting sued by Monster. So they had 2 lawsuits going for Monster, each for $250 million. Bang lost both of them. One was for patent infringement or trademark infringement, I forget. The other one was for lying about their ingredients. They lost both. So they had to pay Monster $550 million. They didn't have the money. So they filed for bankruptcy.
Wow.
Pepsi dropped Bang. And then Pepsi came to Celsius and signed that distribution deal with Celsius last August. And, that's when the story, obviously, went up 2 notches. In addition to now being their global distributor, they also made a $550 million investment for an 8.5% stake. So Pepsi has some skin in the game right now. So the goal is to obviously expand them across the U.S. And then starting in 2024, they'll take Celsius overseas. So right now, Celsius has they have a little bit of sales in Europe, in South America, Australia, China, but it's 4.5% of their total sales. So it's very, very small slice of the pie. If you look at Monster and Red Bull, both of them do 40 to 50% of their sales outside of the US. So that's obviously a pretty big opportunity for Celsius. And then on top of that, they're going to have Pepsi. I mean, Pepsi sells their products in 200 countries and territories around the world. Now, I don't know how many Celsius will get into over the next 5 or 10 years, but it's obviously going to be a lot more than, what they're in right now. And, in my investment models, if they can get to, so I do think, so right now, Celsius in 2023, they should do 1.3 billion in revenues. Next year, I think they have a shot at 2 billion. I think they get to 8 billion by 2030, which is where Monster will be next year. So,
wow.
Over the last 20 years, Monster has grown from what used to be called Hansen's Natural. That was the original name for Monster. And then they changed the name to Monster, I don't know, back in 2006, 2007, I forget. Monster's obviously been a great growth story over the last 15, 20 years. They have never even come close to Celsius's growth. They've never had. They've
Can you
never
touch
had a
on that
triple
for?
digit. What's that?
I was just going to say, can you touch on that for a second? Because you said Monster has been a great growth story, but weren't they the best growth
Yeah.
story in the 2000s? Like, aren't they considered the best growth stock on the market?
Yep. Over the last 20 years, they are the number one performing stock of all stocks on the planet.
Yeah.
It's like 50,000%.
And you're saying they have not touched the growth that Celsius
Oh,
is
not
seeing
even
right now?
close. No, I think their best growth year might have been 50%. I think they've only done 50% once. Celsius has done triple digits each of the last 2 years, and they'll do at least 90 to 95% this year with a shot at 100% this year. So there's a chance they could do 3 straight years of triple digit growth. And Monster, I think, has only done 1 year above 50%. So, I mean, it's like what Celsius is doing right now in that energy drink space is unprecedented. But so Monster is on pace to do $8 billion over the next 12 months. They have a market cap around $60 billion. Celsius is at like $13 billion right now. I do think if they can get to that $8 billion number by 2030, they could also sport a market cap close to $60 billion. There's obviously a lot of things that have to go right between now and then, but I mean, they're certainly doing the right things. They have a great partner in Pepsi. If you look at the category, so the total addressable market right now, so there's gross and there's net. So the gross revenues for energy drink sales around the world this year is expected to be about $85 billion. And it's growing at 8 to 10% a year, which means it should double over the next 8 or 9 years.
Understood. Okay.
So over the next 8 or 9 years, that the gross revenues from energy drink sales global will, let's say it's going to be around $170 billion. The net of that is about 50%. So that's what goes to the energy drink companies, because they'll sell a can, just keep this simple. They'll sell a can to CVS for $1. CVS is going to sell it for $2. That $2 is what counts towards the TAM. So the net sales is what goes to, so in 8 or 9 years, you're talking about $85 billion in revenues for all of the energy drink companies. And I think Celsius can get up to about 10% global market share. Monster right now is around 20%.
What I also think is quite interesting, you tell me if I'm wrong, because this is not a company that I've done a lot of due diligence on, but just understanding a little bit about what I'm hearing on social media is that Monster, for the most part, Red Bull, for the most part, these are male-dominated, energy drinks. But Celsius and a lot of the new players have kind of been really gaining a lot of share in female markets. Is that true to say that Celsius is more reaching a much broader demographic?
Yeah, Celsius is closer to 50-50 male-female versus Red Bull and Monster, which are probably 75 to 80% male, if not more. Like I don't even know the last time I saw a female drinking a Red Bull.
Yeah.
Like it's so male dominated. I mean, just look at how they, their endorsements, their influencers, it's like race car drivers, it's, guys on dirt bikes, those types of sports.
Extreme.
Yeah, extreme. You're right. That's the word I'm looking for. Extreme. Like guys jumping out of airplanes without parachutes, and with the guy that went into space and jumped out of whatever that was and free fell to earth. Like that's the stuff that Red Bull does versus Celsius, which does do some college football and UFC, but they also do a lot of other, mainstream sports, I guess, like tennis, and then women's sports. But they've also done a phenomenal job on social media with a lot of these female fitness influencers and models. Like if you follow the Celsius Instagram page, they throw these parties all over the country, all over the world. And then, they bring in like some of the biggest fitness and model female influencers like there is out there with, 5, 10, 15, 20 million followers. So they've done a lot right. I mean, a lot of that is out of the Red Bull and Monster playbook. I just think Celsius has executed it better than those two companies ever have.
Well, they have an advantage. They can see what Red Bull and Monster have done, and they can see where there's improvement on that.
And Celsius is more of like, it's kind of so if you talk to the CEO, like he'll never call it an energy drink. He calls it like a functional beverage. And in a way, I mean, there's the healthier aspect of it, but like I wake up in the morning and with breakfast, like I'll actually have a Celsius with breakfast. Like I would never have a Red Bull or a Monster or a Bang with breakfast. Like that's insane. Like I'd have to be a crackhead to do that. Like Celsius, maybe just because it's a smoother, sort of energy boost. Like I think the other energy drinks kind of make you spike and crash. And Celsius, it's a little bit smoother. Maybe it's because it has the guarana, the green tea in it. So I'll drink one in the morning, I'll drink one with lunch, and then I'll drink one in the afternoon before my workout. Now, I know I'm a bigger guy, so I can handle 3 cans. Some people might do 1 or 2 cans a day. But
what is the caffeine intake on a Celsius?
200 milligrams.
Okay. And
how does that compare?
Yeah, Prime Energy just recently got sued for their caffeine consumption. What was theirs at?
I'm not sure. They're either 200 or 300. They might be 300.
Yeah, maybe.
Like Bang's 300. Some of the Monster cans are 300. Celsius does have a 300 can. It's called Heat, but no one really knows about it. There's only a few flavors. I'd almost wish they'd get rid of it, or
they do powder form, right? Too.
They do, yeah. So the sticks. So sometimes when I'm traveling, I'll throw those sticks into my suitcase, and then like in a hotel room, you just mix it with a glass of water, and you can get your caffeine that way. I do think so. I mean, I talk to Celsius management pretty frequently, maybe 2 or 3 times a month. And, there are some products that I've pitched them on, and I know they're working on some of them, one of which would be a 100 milligram can. I think there's women out there that would prefer to do 100 milligrams instead of 200 milligrams. There's people that drink these maybe later in the afternoon that would prefer 100 instead of 200. Older people maybe want the less caffeine. And then, of course, if you go to like a bar or club, you'll see people ordering Red Bull and vodka. Red Bull actually only has, I think, 110 or 115 milligrams of caffeine. And if Celsius wants to compete in that market, the bars, the clubs, the pool parties, they can't do it with the 200 milligram caffeine, 200 milligram can. They'll need to be closer to 100.
So I want to give you some background. Both myself and Tevis are both from Canada.
Okay.
He's never even tried the product. I was recently in America, and like you, I was doing Celsius with my breakfast because it kind of has that green tea taste in the back, and it doesn't feel harsh like all the other energy drinks. It doesn't feel like an energy drink.
Agreed.
And absolutely, I fell in love the second I was doing them. We were buying them by the case, putting them in the fridge. That's all we drank when we were down there. That's why I'm really sorry. Go ahead, Tevis.
Well, actually, I have a friend who just moved to Toronto from the States, and she insisted on driving over, and one of the main reasons of it was because she was going to buy like a couple of cases of Celsius in her car because they don't sell it up here.
Yeah.
And every like 3-4 months, she goes back down to the US to get a top up for the next 3-4 months. And that's where I first heard of Celsius and then female, right? So it was just an interesting example.
So Canada is going to be a big market opportunity for Celsius once they launch there. So I'm not sure I'm supposed to say this or not, but I will. Pepsi has a distribution agreement with Guru Energy in Canada.
Really big right now here.
That expires soon. And the thought is that Pepsi will not renew that, and then they'll just start distributing Celsius in Canada instead.
So Jonah, maybe we can touch on this point because, the context is really interesting with regards to how involved Pepsi is in a lot of these distribution deals. And now that they own 8.5% of Celsius, is there a chance that Pepsi just buys them out, right?
It's possible. I mean, when Pepsi invested last year, they did preferred shares at $75. They got a phenomenal price. I mean, it's obviously it's at $150 now. It was over $200. Like I go back and forth on whether or not I think Pepsi will buy them. I mean, looking in hindsight, Pepsi should have bought them last summer. I'm sure there was discussions. Like it's hard to believe there weren't discussions. It's just, I don't know what price Celsius management would have thrown out. I'm guessing at that time, it would have been probably at least $150. And maybe Pepsi was like, no, that's just too pricey for us. But I mean, the growth over the last year since they did that deal has been phenomenal. I'm sure Pepsi's probably kicking themselves right now. Like, if you go back to 2000 and I think it was 2016, Coca-Cola was already distributing for Monster, but they wanted a stake in Monster, and they invested $2.1 billion for a 16% stake. And I think that valued Monster at like, I forget what it was. Was that $15 billion or something? And now Monster is $60 billion. So the stock is basically, the valuation's 4x over the last 8 years for Monster. Like, I gotta believe Pepsi's looking at that deal and be like, Jesus, let's not make the same mistake. What if Celsius goes to 60 over the next 8 years? Like, we could have bought them right now for 15, 16. Like, those conversations have to be going on. And, like, they got to be thinking, okay, are we really going to help this company go overseas and just increase the valuation, which is just going to make it more expensive for us to buy them later? Like, I would think they want to buy them now before they put in all that work and help them grow overseas. But,
Right.
It's real money, Pepsi. And if you look at Pepsi sales, I mean, all these larger beverage companies, they have no organic growth. Like, they're eking out like 4 or 5% revenue growth this year. It's not from volume growth. It's all from higher prices. They're increasing prices, making products smaller to maintain their margins. Like, these companies have, the big pharmaceutical companies do the same thing. Once their organic growth slows down, they have to go out and find new companies to buy to, try to help, keep that top line growing, keep the pipeline full. Like, I would think Pepsi would want to buy Celsius. Part of me doesn't want them to, because I just think this is such a phenomenal growth story that, has another 5 or 10 years left. I kind of hate to see Pepsi buy them right now for $220 and then not be able to watch the stock go, maybe to 400 or 500 over the next 5 years. But we'll see. I mean, it's out of my control right now. If you look at the valuation, like, I know people say, oh, it's this overpriced, high growth, high value stock. Yeah, it's trading at like 70 or 80 times earnings right now, but they're also growing revenues by 115% and they're growing earnings by 300%.
Yeah.
So those stocks aren't going to be cheap. Like, I saw some clowns on Twitter saying Celsius should be growing at 30, should be trading at 30 times earnings right now. Why? Because they're growing earnings at 300%. Obviously, that's not sustainable, but let's not be stupid here. I mean, some people are just so used to buying stocks at 20, 30 times earnings. They think 70 or 80 is ridiculous, but you have to look at it in the context of their growth rates. Now, this year's growth should be about 100%. Next year, I have them growing around 50%, but there's also going to be some margin expansion in there. So over the past year, gross margins have actually increased by 1,000 basis points. Part of that is because freight costs have come way down. Aluminum can costs have come way down. And the efficiencies of working with one distributor, i.e. Pepsi, has really helped their margins versus before when they were working with dozens and dozens of regional distributors. So there's a lot of efficiencies of economy efficiencies or efficiencies of economy. I don't know. But anyways, that's the benefit of working with Pepsi. Pepsi also has their own sales teams that's out there selling products to restaurants, universities. So that was a big surprise in Q2. So going into Q2, the analysts, I think, were looking for 276 million, and they ended up doing 326 million. So they beat the estimates by $50 million, which was a massive, massive surprise. I had them doing closer to 3, so even I was blown away. And part of the biggest surprise, international was a big upside surprise. Amazon is still growing 100% year over year, and food service. And that food service is definitely connected to Pepsi and all of their relationships. Now, Celsius has been deploying their own branded coolers into stores. So if you walk into a CVS or Walgreens or maybe a Kroger, you'll see a Celsius standalone cooler with all of their products in it. They're supposed to have about 20,000 of those in stores by the end of this year. I'm assuming they'll probably keep adding another 10,000 a year until they maybe get up to 50,000 total. On top of that, Pepsi has their own 50,000 energy drink coolers. sitting, near checkout aisles. So like back when I go home and visit my parents, if I go into Shaw's supermarket, there's a Pepsi energy drink cooler right by the counter with Celsius, Pepsi Energy, I think is still in there, and Starbucks. So they're actually a distributor for Starbucks products. So you'll see some of the Starbucks like bottled products in there. And then on top of that, Pepsi has like another 300,000 or 400,000 coolers in, the back of gas stations, convenience stores, grocery stores, like, all over the place. So, I mean,
and they're going to put in what's selling best for sure.
Oh yeah, for sure. Yep. Yeah. I mean, that's where Bang used to be, so Bang came out and Celsius goes in.
Yeah. So go ahead, Tibbs.
Okay. Maybe I can ask around, just the valuation in general. Like I get that growth is priced in and the future, is priced into the stock, like that it's going to trade richly. Just looking at the valuations of Monster, I mean, that's 60 billion. I mean, when you invested in this, you got a 15x since you invested. It's been flying. At the same time, I don't want to discount how far it can go because Monster's gone like, 60,000%. But if we're thinking about, Celsius in the context of they can command a similar valuation to Monster, that's what, like a 5x, 6x from here.
Yeah.
What is it something that, you think that can surpass Monster? I know you said that your target was 8 billion by 2030 and Monster's doing 8 billion next year. Monster's at around what, 50, 60 billion valuation. Celsius is around 10, 11.
Yeah, they're probably around 12 today.
Well, yeah. So talk to me a little bit about that. Like if we, because, hindsight is 2020, right? So if we invest today, we're not going to get a 15x, but what is like a reasonable target that you're looking at from today's price up until 2030, let's say?
Right. So, I mean, I have investment models going out to 2032 for Celsius. If they can get to 8 billion in 2030 with 22% net income margins. So when I first invested in Celsius, they had a 1% net income margins. This year, they'll be 11 to 12% net income margins. Next year, they could be 14 to 15%, depending on how much they have to spend to, launch in these new countries and how much Pepsi's doing.
Could you repeat yourself? You said the margins are going to continue to improve?
Oh, yeah.
Okay. Yep. And where's the cap on that? Like where does let's say gross margins get to? Currently 48.8%, went up 10% year over year. Does that continue to go up?
Yeah, a little bit. I mean, Monster probably has gross margins now, or they will soon, because they've also, Monster also watched their gross margins go down during the pandemic because they also had to deal with the higher freight costs, higher aluminum can costs, commodity prices, all of that. So
this isn't really a massive improvement on gross margins. It's just recovering from a lull from last year.
Well, yeah, for the most margins, net margins can go up regardless of like if gross margins stay flat, they could just improve their operating.
I think gross margins, maybe best case scenario, get up to maybe 53, 54%.
Okay.
But I think net income margins can continue to improve. So, I mean, you kind of look at Monster before the pandemic, I think their net income margins peaked around 25 or 26%. So I think Celsius could probably get there with more scale over the next.
What about the more natural ingredients? Does that require a higher cost of goods?
Maybe, but I mean, I think that's also where Pepsi comes into play. Pepsi helps with, buying raw materials in greater bulk. At some point, Celsius. So right now, Celsius doesn't manufacture their own products. They use what they call contract manufacturers.
Sure.
I do wonder at what point does Celsius start to do their own manufacturing or hand it off to Pepsi. And could that also help improve margins as well? Now, when they go overseas, like, Celsius is not going to be making product in the US and shipping it to Europe. They're going to have to start working with European manufacturers, which, I mean, they obviously already do, because they do sell product over there as well. So, I mean, I do think there's some levers to pull to help increase those margins. But I just sort of look at where Monster was on net income margins, and I think Celsius could probably get there at some point. So, if they can add maybe 1.5% to net income margins per year, that probably gets them to 22, 23% by 2030.
And so, let's work backwards then, back to the valuation models. Let's just say they get their net income margin to 22% by 2030. Like, what in your models, where do you see them being from a market cap perspective?
So if I throw 8 billion in 2030, 22% net income margins, throw a 26 PE on that, and you have about 48.5 billion market cap plus the cash, they'd have about 6.8 billion of cash by then, assuming no buybacks. So you'd have, about, a company worth about $55 billion.
So like a 5x from today.
Yeah. Yep.
Okay, so you said no buybacks. What does a player like Monster do at their size? Are they buying back? Are they distributing dividends? What are they doing right now?
I don't know if they pay a dividend. I assume they've done some buybacks over the years. I mean, they've generated. Well, I know for a fact they've done buybacks because when Coca-Cola first invested in the company, and I think had a 16% stake, that stake is now closer to 22%. Because Monster has bought back so many shares, it's increased Coca-Cola's overall stake in the company because they haven't sold anything. Okay, so they've done, so I would assume Celsius would do buybacks as well. The other thing is Pepsi could make a larger investment. Pepsi could increase their stake to 10, 15, 20% if they wanted to. I believe anything above 10%, they would have to go to the board and get approval. But I mean, that could certainly happen. If I look at market share, so like global market share, so right now, end of 2023, Celsius will have somewhere around 2.6% global market share, with only 4.5% of their total sales outside of the U.S. So even as growth in the U.S. starts to slow down, and it's going to have to. I mean, you can't keep growing. Like right now, Celsius is growing 114%. Year over year in the US, like you can't keep growing that fast forever. It's just impossible. So, I mean, I think that growth will slow down to maybe 50% next year, 40%, 30%, 20% ballpark, but you'll have international growth going, ripping higher from there. I mean, right now, international growth is 76% year over year. That's going to start that once Pepsi starts to, push on international in 2024. You're going to have 2 or 3 years of triple-digit international growth as they expand into new regions. So, that's going to help offset any slowdown in the U.S. market. So I think, by 2030, I think they could have 9 or 10% global market share. So that's kind of my longer-term investment thesis.
And they're sustainably profitable too, right?
Oh, yeah. Yeah, I mean, they have –
Do they have debt?
They have 11.5% net income margins through the first 6 months of the year.
Do they have debt?
No debt.
Tiny. Less than $1 million of debt.
And they have about 600, probably 650 in cash.
Yeah, I'm seeing 680, but so 680 million.
Yeah, because I mean, 550 of that is from Pepsi's investment.
Got you. Okay.
So over the next 5, 6, 7 years, as they start to generate some serious profits and free cash flow, like I don't know if they're going to use that for buybacks. I assume they're not going to use it for dividends, but I would think they'll look to, there's going to be some organic product development, launching a 100 milligram caffeine can, launching a hydration drink. So if you're familiar with Prime Hydration, that's growing like 300% year over year.
Monster's entered that category as well, I'm pretty sure, right?
I don't know what does Monster have?
There's these Monster hydration. It's just water based. They're not carbonated. They're really common up here in Canada. They look like a Gatorade bottle, but it's Monster.
So, okay. So, I mean, the 3 big boys in that space, before Prime are Gatorade, Powerade, and Body Armor. So, quick story. Back in, 20 years ago, some guy in New York City was sitting on a couch sucking on a vitamin, drinking water, and going, why doesn't someone create a vitamin water? So he created vitamin water. A few years later, sold it to Coca-Cola for over $4 billion. Then he went and started Body Armor and sold that to Coca-Cola last year for $5 billion.
Got you.
Coca-Cola bought both of them. So Coca-Cola owns vitamin water and Body Armor. Pepsi owns Gatorade. So I would love Celsius to get into that hydration / intra workout space. I just don't know if they will, because it means it'll compete against Gatorade, which is a Pepsi product. And
this is the thing I was just quickly talking about.
And will Pepsi put Celsius's hydration drink in the same cooler with Gatorade? I don't know. Right. So I would think those conversations are happening. I know the CEO of Celsius has mentioned he'd love to do a hydration drink. I would assume that's probably part of the holdup.
So maybe we can stick on that topic for a second. We talked about the valuation, potentially 5x in the next, but let's say till 2030. What are
can I add on that really quick? Because I've been really wanting to say this, because
sure.
I cover a company called Nubank. They're a digital bank out in Brazil. But I find what's really important is that some people will look at a company like Celsius and then look at its big brother Monster and say, okay, that's how big we can get. But I find that the health changes in this brand bring it out to such a larger market, and that what truly makes a real disruptor in a stock market is one that reaches new customers that Monster or Red Bull never would have reached. Right.
Yeah, but
having an energy drink for breakfast is a new idea.
Tapping into the female consumer.
Exactly. So I do actually think people need to see this as not only is the total addressable market growing, but Celsius can push a lot of the growth for the total addressable market.
So on that point, we're not saying that Monster's or Celsius is going to be capped at Monster's growth.
No,
but in order for Celsius to overtake Monster, they first have to reach Monster. And I guess that's the mile marker that's the checkpoint that we're looking at, is to say, okay, when can they reach Monster's market cap? And then the sky's the limit from there.
Yeah, but what I'm saying though is if growth doesn't slow down, over the next couple of years, that you're going to have a Tesla effect where, this one automaker company can have a market cap that's larger than every other automaker that exists. So
combined,
it doesn't need to have the market, the size of the market space in order to have the market cap that Monster does. It just needs to hold up growth rates so that it way surpasses it.
So it depends on what the valuation is, right? Because if we're thinking about the revenue to be 8 billion, let's just say by Jonah's numbers, 8 billion by 2030, and then Monster's doing that already. If they have the same PE assigned to it, then obviously
but it's not going to have the same PE.
They won't
if they have higher growth
faster.
Yeah, exactly.
So the last Nielsen, every 2 weeks I get Nielsen data, Nielsen sales data. So that's retail scan data. That's like retail stores, grocery stores, convenience stores. Over the last 4 weeks, ending the end of September, Celsius's U.S. retail sales data, 154% year over year. Monster, 8%. Red Bull, 3%.
Yeah.
What they're doing is unreal compared to. So what's going to happen is Monster is, yes, at 8 billion right now, but they're only growing at 8, 9, 10% a year. Celsius is going to be, Celsius could blow by them at some point.
I'm telling you guys, whenever I was in Florida, I could see myself discovering this product through the likes of a convenience store or Walmart or something like this, and then going on Amazon and buying a case of it as if it was a coffee replacement. For sure. I would never buy a case of Red Bull because it's a guilty purchase. It's a guilty pick-me-up. I don't feel guilty drinking a Celsius. That's a different market.
In a way, I don't think, everyone talks about the consumers getting strapped and credit card debt is, at all-time highs, and we could run into a recession next year. So everyone's afraid of owning Crocs stock, right? People are going to stop buying $50 Crocs and Lululemon pants. Celsius is $1.50 a can.
Yeah.
I'd be a hell of a lot worried. I'd be more worried about owning Starbucks, people cutting back on their $7 lattes, than someone cutting back on their $1.50 can of Celsius. So like in many ways, like Celsius could benefit from a recession from the trade down effect. But
it's a great point.
Wait, Tevis, because I know you're going to try to pivot us. I did want to add as well. I was reading up about the Prime Energy thing. They were pushed out of Canada or having large problems with Health Canada because it was 200 milligrams of caffeine.
Yeah, so I do think when we see Celsius launch in Canada, I think it's going to be closer to that 100 milligram can.
Yeah, I guess our limit on caffeines at that size of a can is 180.
Because we have Monster up here, we have all the other energy drinks up here, so I don't.
But they might have less caffeine than in the U.S.
Like a modified version, maybe.
Yeah, because I do know Rockstar is pretty high on the caffeine, but it's a much larger can than the likes of like a Prime Energy or Celsius, which is more of that skinny can.
I mean, having a 100 milligram can is a no-brainer. Not to mention, like Celsius already has 20,000 of their own coolers out there. Like you should have more than just the 200 milligram can in those coolers. You should have a 100 milligram can. You should have the hydration drink. So
there's a lot of levers to pull here for growth.
Yeah, there is. But it's going to come down, like part of that is going to come down to what Pepsi says yes to. If Pepsi won't distribute a product that competes against Gatorade, then that might be a non-starter for Celsius.
So really quick then, Pepsi's distribution has taken this to, at least the way I'm hearing it, the next echelon of growth. How involved are we with Pepsi? Like, are they distributing, 40% of cans out to grocery stores and stuff like this? Or like how much more involved can they get to continue that growth?
So I think Pepsi runs every channel except Amazon and membership clubs.
Okay.
So because membership clubs like Costco, Sam's, BJ's, Celsius is literally shipping them pallets of cases. So they don't need Pepsi to do that. They can just ship those pallets directly from their manufacturing facilities. So I believe Celsius gets 100% of that margin. They don't have to share it with Pepsi. And then Amazon is the same thing. I mean, they ship directly from manufacturing facilities to Amazon warehouses. And then Amazon obviously, pushes it out from there. And then
Pepsi could really help with
Pepsi runs everything else. So convenience, gas station, grocery, university, airports, everything else is I think run through Pepsi.
And getting us more of the better placements in those fridges is also part of Pepsi's.
Oh, for sure. Right.
Okay.
And that doesn't happen overnight. There's definitely some sort of a transition. I mean, I think we've seen most of that transition. And then what happens is every year these stores do their resets, their new planograms and everything. And they decide, what's selling the best. And that's where, we're going to take out the crap that's not selling. We're going to put in the stuff that is selling. So you are seeing Celsius get more cooler space, shelf space, better placements, which is going to help drive sales as well.
Right. Okay.
So
go ahead, Tevis. Sorry.
Just sticking on the growth drivers point, it's like we've talked about quite a few. Overseas expansion. I found that really interesting with Monster and Red Bull having 40 to 50% of their sales coming from outside the US, and that's like untapped for Celsius. New product line, so 100 milligram caffeine cans, dehydration drinks, vertical integration. I think would be really interesting to explore as well, like cutting out the contractor for the actual production and bringing that in house. What's management's what is the thing that they're looking at actively to say that, hey, this is the thing that we're chasing more than all these other growth drivers, like on earnings calls and such? Like, what is the thing that they're tracking?
That's one of the answers.
Yeah, I mean, they're still being a little vague. Like, I actually wish they'd give us a little bit more detail on their international growth strategy. They've just made hints that Canada and Europe will be the focus for early 2021, and then we're not 100% sure what happens after that. It is worth
early 2024. You mean?
2024.
Okay.
But Mexico, South America, Africa, Middle East. I mean, those are all big markets. I don't want them to happen all at once. I don't want them to get overwhelmed by trying to expand too fast. I think you do have to be somewhat focused. I mean, certainly they've been focused on the US. They know that's still the biggest market in the world. They know that they still have they only have like 7 or 8% market share in the US. So there's still a long ways to go there. What's interesting is when Pepsi made the investment into Celsius, Jim Lee from Pepsi joined Celsius's board. He's the guy that's overseen Pepsi's international growth strategy for the last 20 years. So he ran growth in Europe, Russia, Asia, Australia. Like he knows those markets. He has the connection. So he's on the board now. So I'm sure there's some pretty interesting conversations going on. Like I wish I was privileged to hear them, but that's obviously above my pay grade.
Yeah, no, that's a huge point. Like this guy has the entire playbook of what he did for Pepsi.
Not to mention Celsius, because they have money and they have a brand, they've been hiring people away from Red Bull, Monster, Rockstar, Bang, hiring top management people that helped scale those companies, from nothing into, 30, 40, $50 billion companies. So, Celsius surrounding them, like when Monster and Red Bull, grew over the last 20 years, like they were kind of creating the playbook, as they went. Like now there's a playbook, and these guys that actually grew those companies are on the Celsius team helping them do it right.
So, Jonah, let me ask you this, my last sort of main question, because I'm getting excited. This is all very bullish stuff. The company in and out. What is a known bear case that you can make? Not like unknown, like, black swan event, or if people all of a sudden stop drinking their drinks, but like, what is something that is known that bears are using today? Is it just valuation or like financial engineering, or is it actual like product lines? Or
some try to pick at the valuation, but I think they're just like they're looking at it through the wrong lens. They're saying, no stock deserves to trade at 70 or 80 times earnings. Like, well, yeah, they do if they're growing earnings by 300% this year and 100% next year. So, if Celsius does expand their net income margins from 11.5% this year to 13, 14% next year, and they grow revenues to that 2 billion number, that's going to put them around 100% earnings growth next year as well. So if they do 150 million of net income this year, 2 billion at 14 or 15% gets them close to 300 million of net income next year. So like if that's the case, if they do close to 300 million next year, the stock's trading at close to 40 times next year's earnings. Like that's not crazy for a company that's going to grow earnings at 100% next year, or maybe 90 to 100%. And like I said, I don't expect the stock to trade at 40, 50, 60 times earnings forever. That multiple is certainly going to come down over time, but they're going to generate a ton of cash. They're going to keep revenues growing by 20, 30% a year with that international growth. So bear case, one is valuation. The short interest is 25 or 30%. It's been 25 or 30% for the last few years. So anyone that wants to like say, the shorts know something, the shorts have been absolutely freaking demolished in this stock. So why would you now start to trust them or believe them or think they know something? I do wonder, like, it seems so silly for short interest to still be that high when we can literally look at the Nielsen numbers and be like, they're growing sales, U.S. retail sales by 154% year over year. And that's a third-party company, Nielsen, reporting those numbers. Like, there's nothing fishy with these numbers. Like, all those numbers.
And that's accelerated growth.
Yeah, right. So, okay. So that is another part of why I think Q3 earnings will be so good. When Celsius reported Q2 numbers, U.S. total growth across all their channels was 114%.
Yeah. But
retail sales was 140%. So retail was 140%, blended was 114, which means like food service, Amazon, clubs, all that was obviously below 140%. It was like high double digits, low triple digits, added all together. But U.S. retail sales is still the biggest chunk of the number. U.S. retail sales in Q3 has accelerated from 140% to 154%. So I do think there's a chance that, that blended number could be above Q2's 104 or 112%, it was 112% overall, 114% in the US, 76% international. But I think we could see even a bigger number for Q3, which probably puts us above 380 million, maybe closer to 400 million. The analysts are currently at 350. When Celsius reported Q2 earnings, the Q3 estimate was 300 million. And after Celsius obviously smashed the Q2 number, the analyst raised their Q3 estimates from 300 to 350.
Yeah.
But I think there's a chance they could even beat that. Maybe do 380, 390, 400.
I know you said from a product perspective, their ingredients are actually healthier than the other competitors out there. Is there anything that we could see from a regulatory perspective?
Yeah, so
or
that's I was going to say that next. If Congress decided to start cracking down on energy drink companies and say, okay, you can't have 200 milligrams anymore, you can only have 150. Like, it doesn't really change anything. Then you just
that's an industry what? Yeah,
you change the formula recipe. You do 150 milligrams. Guess what? Now people drink twice as many cans to get more caffeine.
Yeah.
Like
I don't even think
part of me wishes Congress would say, let's go to 100 milligrams. Some people would drink twice as many Celsius in order to get to 200 again.
Sales would increase.
Sales could increase.
Yeah. Why don't you stop, what's called Starbucks from allowing you to sell a quad shot espresso or something like this before you worry about what Celsius is putting in their cans.
Not to mention those Dunkin' Donuts and Starbucks, like the Frappuccino stuff. It has like 400 grams of sugar in it.
Yeah.
Plus 400 milligrams of caffeine from all these espresso shots. Like, how the hell is that legal?
Yeah.
So, but I mean, there's regulatory risk. Valuation's not cheap, but I think it's justified given what growth could or should look like over the next 3, 4, 5 years. I would say, so I don't know how many people know this. I probably shouldn't even say this because I'm not trying to publicize it, but the largest shareholder for Celsius, Carl DeSantis, who invested in the company 10 years ago when Celsius was basically bankrupt as a penny stock, he died this summer. So it's possible his estate will have to start selling off some stock. His son, Damon, is on the board of directors. So he's still very, very attached to the company. So
How big is that stake?
$2 billion.
Like, as a percentage of the... I guess $2 billion out of the 12 billion.
Something like that.
Like 15 or 20% of the company. So it's a big chunk. Like, I'm sure they're going to sell it down over time, but I don't think they're like in a hurry to dump all their stock. I do think that it's possible. He died in August. The stock peaked in September and it's pulled back 25%. I think there's a decent chance some of that was from his estate selling.
Sure.
Right. I mean, or it's just like the stock went up 150% from the March lows and it was due for a pullback. Like, so
and you get enough whales that also know this information as well. And they try to, trade out of it before that happens.
And it's just, growth stocks have been pulling back as the 10-year yield went up. So it's probably a combination of those, yields going higher, some big whales trying to sell ahead of the estate, the stock going up 150% over the last 6 months. People may be worried about a recession coming. And does that mean that, it's going to hurt Celsius sales? I don't know. A bunch of things. But like I said, I mean, there's been 10 pullbacks of 25% or more over the last 3 years, and yet the stock is still up 1,500%. So,
and I think that's a good point, though, that people need to understand is the thing that makes Monster stock the best company over the last 20 years is the fact that they did it over 20 years. This wasn't a 1 year company that 10x or something like this. The exciting part about it is the continuous long-term growth. That's what made Monster such a monster company to hold. Celsius will obviously have large drawbacks, but you need to zoom out and look at the long-term vision of what's going to happen to Jonah's portfolio over the next 10, 20 years of holding this multiplier. That's what creates long-term wealth, not one company that's looking to double or triple and then trade out of it. That's not how you make it.
When you get consistent growth plus margin expansion, that keeps earnings growth at a significant level. keeps
with
the
a total
PE
addressable
high.
market that keeps growing.
Exactly. Right. I mean, there's not too many markets out there that grow, 8 to 10% a year or expected to grow that fast over the next 10 years.
Yeah.
Jonah, you might not have this number top of mind, but would you have an idea of what the institutional ownership is? I would imagine quite low.
I think I was just looking at that.
So I know the two biggest shareholders, so DeSantis and this guy,
60%. Oh my
Shui-
God. What is
Shui
going on?
Ling, whatever his name is, the guy from China, he owns like 20 or 25, 15 or 20% maybe. So, I mean,
What's going on
DeSantis.
with insider holdings in this company?
Throw it up on screen, please.
So
It's insider holdings 41%.
Yeah, that makes sense. DeSantis and the guy from China together probably own close to 40%. Plus, I mean, think about it. Like, so the current CEO is John Fieldly. Yeah, that makes sense.
The 41% insider holdings, 60% institutions. So institutions are shorting this stock a little bit. Retail is not even existent on this company.
So think like, so my two closest contacts at the company are John Feely, the CEO, and Toby David, head of sales. Toby David's father was actually the previous CEO. So John was the CFO. When Toby's dad retired, John became the CEO. Back then, this was a penny stock. So these guys were probably getting, they were probably getting some options, when this was a penny stock. So they've watched their stakes probably go from $500,000 to $50 to $100 million. And then you have those the two biggest whales, DeSantis and Lee Ring Shaw, whatever his name is. They were both investing in the company 10 years ago when this was a penny stock as well. There's some weird stories if you go back 10 years. So Russell Simmons, do you remember him? Like hip hop guy, Russell Simmons.
Yeah, vaguely.
Okay. So
we're too young.
So he was an investor way back when. The original guy from Shark Tank, Kevin Harrington, he was an investor like 10 years ago. Russell Simmons' ex-wife, Kimora Simmons, when they divorced, she got some stock and then she pitched it to her new boyfriend at the time, who was the guy from Goldman Sachs running like Asia's group. So he invested like $50 or $100 million. And then he got busted with some embezzling thing last year. So like the SEC took his stock away, and like there's some crazy stories going back with this company. But 40% insider sounds about right. So I don't know if that's good. I don't know if that's good or bad. I mean, I don't know. I guess that leaves some room for institutions to increase their stakes, maybe. Or
I think that's phenomenal, because you know what? Like I find the longer that a company is public, you see insider holdings go down as slowly they're selling off, or new management comes in, or usually insider holdings on a long-term company gets under 10%. At 40% is just incredible. But
I also don't know where Pepsi, like I don't know which side Pepsi's on. Like, are they considered an insider or institutional?
Insider probably.
Yeah.
So that might be high for that reason too.
Sure.
I mean, look, like just the two guys alone and Pepsi would make up, 30.
Although I don't know if Pepsi.
The fact that they're not selling is quite incredible. Like you're not taking the gains on your position after a 15x over 2 years.
That's a good point, because that cuts both ways too, right? Because if you have 40% insiders and it's concentrated in those insiders, like they could dump pretty hard.
So Pepsi's stake probably hasn't been counted yet, because they have preferred stock, and I don't think they've converted it yet, because they're getting paid a quarterly dividend. Just to hang on. So because you haven't seen the outstanding shares increase since Pepsi did the deal. The outstanding shares is still around 76 million.
Yeah. So can you tell me just lastly, just so I understand a little bit on stock-based compensation or anything along these lines?
I was glad you asked that. I would challenge anyone to find another company in the United States with a market cap above 12 billion that has less stock-based compensation than Celsius. So their trailing 12-month SBC is around 30 million. There are some fintech companies cloud companies.
I could challenge it. But Adyen would be what I would say would be probably.
Well, they're not based in the U.S. though.
No, true.
No, there are some international companies that have very low SBC. This is like a U.S. problem, but like Coinbase, DraftKings,
very true.
Those companies have like anywhere from 250 million of SBC a year to $1 billion. Like Zoom and Coinbase have like $1 billion a year of SBC. Like that is insane dilution over the next 5-10 years. I don't know how shareholders are actually going to make any money on these companies as growth slows and margins don't expand, and you're adding $1 billion of stock every year. Crazy.
So how are they adding headcount and how has employee counts gone since I told you, Jonah, I told you we'd go over an hour. This is such an exciting stock.
So headcount's low. They don't need a ton of people. Like they outsource manufacturing. They have Pepsi for distribution. So like, I mean, anyone they hire is just doing sales and marketing. So I think they only have like 300 employees.
Wow.
I know. Wow. Like there's some 14. I forget the market. I mean, what is the market cap right now? So is it 13 or 14 billion? It's pulled back. That's why
I gotta bring it up.
Okay, it's 12 billion. A little less than 12 billion. Like there are some $12 billion fintechs and cloud companies out there with 2,000 or 3,000 employees.
I'm pretty sure DocuSign has like 8,000 employees or something last time I checked. Like, what are you guys doing? What are you working on?
And that's why SBC is so high. Like they're paying these people $300,000 a year in cash, another $200,000 a year in stock. The stock price is down 80%, so SBC looks even worse. Yeah. Meanwhile, Celcius' stock is up 1,500% over the last 3 years, and they only have like 300 employees.
Yeah. No, this is
no dilution. So Celcius has 378 employees.
378 employees. Okay, guys, we're going to have to wrap because this is the hour. But I do just want to say, just for the Stock Tank audience out there, next time we have a guest, this is the level of expertise that I'm looking for. I want to know the 10-year history, the scandals that have happened in the company. I want to know everything, stock-based compensation to the numbers, to the margins, a connection to the CEO. Jonah, seriously, this has been an amazing episode. I really do appreciate you coming on. You're welcome back anytime you'd like. This was a ton of fun.
Cool. Yeah. Thanks for having me. I appreciate it.
Tevis, any last comments?
No.
We'll have his links in the description down below as well.
Yeah, one of my favorite episodes for sure. The company is just right on the money of stuff that gets me excited.
So I know the company so well because like I believe in the story, and it's easy to see how this goes up another 3, 4, 5x. Like a lot of other companies, of course I have 20 stocks in my portfolio. I'm excited about some of them, but like not on this level. Like some of those companies, it's not as clear to me. So,
whenever you replace what it seems like your water intake with Celsius, I can see why you like the product. You have one for breakfast, lunch, and dinner. So
my second highest conviction stock and my second largest position right now is SMCI.
Okay.
And then third is Transmedics.
Okay. Well, maybe if in a few months or something, you want to come back and pitch SMCI, I'd be really excited to hear your takes on little semiconductor action.
We could do it after. So they have partnerships with NVIDIA and AMD.
Yep.
AMD is looking at launching their AI chip pretty soon.
Yep.
That would be an ideal time to come on and talk about it. And now Microsoft is apparently looking to launch an AI chip. I wouldn't be surprised.
NVIDIA is my largest position right now. Okay. I think actually maybe a little bit behind Shopify now just because of a little market cap change. But so I'd be really interested in that as well.
So if Microsoft launches their own AI chip, I wouldn't be surprised if Supermicro swoops in there and gets a partnership with them too.
Yeah.
So, they're kind of like the hardware to all of these chip companies.
Right.
I think we can have that as an episode. That'd be an exciting chat.
Yep.
Thank you all so much for watching.
See you guys. Talk to you later.
Bye for now.
See ya.